How you doing, Rick?
I'm doing good. How about you, Megan?
I am doing just dandy, Rick. Just dandy. Ready to take on the week. We've got a
That's
couple
right.
of houses hitting the market, and
Hmm.
there's usually quite a bit of work that goes into a house before it even hits the market. I tell people that's where
Yeah.
most of the work is done.
Yeah.
We have got our act together. We've got repairs done. We've got cleaning done, staging done, or tchotchkes, disclosures, photos, videos, real footage for social media, a plan, a calendar. We have a calendar with
Nice.
open house
Wow.
who's having
Geez,
it.
that's awesome.
We have maps out for open house signs. I mean, it is like everything I could possibly think of so that we're successful. So we've got, and you can't control when people are ready to put their house up on the market.
Right, right, right.
So you just gotta like go with it. So
Well,
anyway,
well, the cool thing with you all the time is that you're always, we talk about this a lot, I know, but you're always the most prepared person in the room. And
yeah,
that's why you get the results that you get. And you and I both see a lot of situations where people are always getting ready to get ready. You know what I mean?
yeah,
And they're never
yeah,
really quite ready and they're always behind the curve a little bit. And that
yeah.
typically does not always end well. Anyway.
I'll tell a story. Last week we had a house that we'd been
Hmm.
working on and working on and working on,
Hmm.
and
Hmm.
I had a lot of
Hmm.
stuff done. And I always take one last look around, before
Hmm.
we hit
Hmm.
the market. And I don't know what in the hell's wrong with me, but there were no smoke detectors in the bedroom.
Oh, wow.
And it's like I never make this mistake.
Hmm. Hmm. Hmm.
And the I didn't realize it until the buyer's agent said something, and it was like 2 hours before the appraisal. And I'm like, oh my gosh, are you kidding me? What an idiot. I never
Hmm.
forget this stuff.
Hmm. Yeah, right.
But luckily, our handyman uh, ran over there and got it all done before the appraiser got there, because what people don't know is that if you have an appraiser come out and you're not ready for the appraiser with your smoke detectors, your
Hmm.
carbon monoxide detectors,
Hmm.
your water heater strap, that sort of thing, appraiser's got
Hmm.
to come back out, and the seller is going to pay the reinspection fee, and that's like $200 at
Hmm.
least.
Yeah, there's a process behind that. Like there's always a process. That means the seller's got to hire a plumber typically to go out and do the strapping, go out
Mm-hmm.
to Home Depot or wherever, get the detectors and install those. It's kind of an inconvenience, but then they have to pay for it too.
Yeah,
So
yeah.
it's just best to get it done up front, one and done,
Get it
and
done.
move
Yeah,
on,
we
right?
never. Yeah, I don't know how we missed that, but the good
Yeah.
news is at least we were able to fix it. But people don't. I think people don't like read the contracts that they're signing, because there's certain language in there, but it also talks about doing these reinspection fees and who's to pay for what.
Right, right, right.
But
Well,
anyway,
the
so
thing of it
every
is,
once in a
appraisers,
while there's something, but
yeah.
we got it fixed. But
Well, what that people have to know is that the appraisers don't go out there and do it for free.
right,
They're going to charge you. That's how it works. And there's no negotiating that. That's what they're going to charge. And that's that.
yeah.
It's the
Yeah.
way it is,
I mean,
right?
$200, that's kind of like to get anybody to get in the car and do anything, it's
That's
$200
pretty well.
nowadays.
That's minimum. Yeah.
Yeah. Yeah. Anyway, so I'm not perfect all the time. That was my imperfect story. So,
Rare.
but you've got some exciting news. So I asked you to tell us about that today with
Yeah.
what's going on there.
Yeah. Thanks. No, thanks, Megan. I changed companies this last week. One of the top three companies in the country, big company called Rate.com, funded last year about $25 billion in home loans. So
Mhm.
they're a big player in the market. And just for disclosure purposes, my license number is 745-219, just for the record.
Yeah, that's
Um,
usually why you have that banner behind you. So you have to get a
yeah,
new
I have to
banner.
change
Yeah.
that one out. So, but no, listen, I wasn't looking to make a change. Really happy at the previous company. We did a great job, as you know. But look, this company has a lot more firepower, some more products that I think a lot of buyers request that are hard to find. And
Mm.
it's a company as big as Rate has that firepower and the resources to be able to access those products. And so let me give you an example of what I'm talking about. In our marketplace in Orange County, we deal with a lot of a lot of home prices that are above that Fannie Mae, Freddie Mac conforming loan limit. They go into the high balance.
Mm-hmm.
You go into that high balance, those rates move up pretty quickly. And,
Mm-hmm.
buyers don't like that. And I don't blame them.
Right.
So people ask me all the time, do you have like a 7-year arm that would give me a better payment? Well, the reality is that Freddie and Fannie don't do those anymore. And so they're hard to
Yeah. The
access in the
ARM is
market.
an adjustable rate mortgage. Yeah.
Correct.
Yeah.
So with this product, typically, depending upon the buyer's scenario, that rate is about a 0.5% lower than the standard 30-year fixed. Well, if we're talking
Mm-hmm.
about a loan amount that's 900, 950, that's a pretty big difference in payment most of the time. And
Mm-hmm.
it's a game
Mm-hmm.
changer for a lot of buyers. So that rate is fixed for that first 7-year period. And after that, it rolls over to a 1-year variable. And by the way, it's still a great loan if they don't
Mm-hmm.
refinance it, and it still pays off in 30 years. But chances are about 90% that most every home buyer within that 7-year period will have an opportunity to refinance that loan to a lower rate. That's just
Mm-hmm.
going to be the nature of the beast. So we can save buyers money up front doing that. We love working with VA buyers, love vets. And so the way that the rate.com honors vets is that we waive all of the lender fees
Oh,
straight up,
wow.
no
Oh, geez.
fees. So what that means to the veteran is that they're not going to pay a processing fee, loan doc fees, underwriting fees,
Holy
totally
smokes. I mean,
waived.
how much of a savings is that off the bat? Like a couple grand.
Typically a couple $1,000.
Yeah. Yeah, that's
So
nice. In
I love
closing
that part
costs.
about it. Yeah.
Yeah.
And we
Yeah.
close those loans fast. We're a direct lender for the VA. We close those loans very quickly. Um, Another thing we deal with a lot of times is, self-employed borrowers and investors. Those are niche types of situations.
Mm-hmm.
And typically the agencies, again, Freddie and Fannie, yeah, they do those, but they're a lot more difficult, a lot more guidelines to work with. Over at Rate, we've got programs called Rate Portfolio, which is super
Mm-hmm.
cool because we have programs, for example, that are self-employed buyers where we don't need tax returns. We can get by with like a profit and loss statement or bank statements to verify the income for self-employed buyers. And on the investment side, we've got programs where we qualify the buyer or based on the property, not necessarily the buyer's income.
Mm-hmm.
And so what I mean by that is we take the income from the property and we qualify the loan based on the income on the property. In fact, on those scenarios, we don't even verify employment. We don't need it.
Mm-hmm.
So for example, a buyer is self-employed, has kind of tax returns that are not too cool in terms of how they
Mm-hmm.
report their income. No problem. As long as the property supports that debt service, we
Mm-hmm.
approve those loans and close them. So
Oh, wow.
yeah, there's lots of really cool things we can do. And then, yeah, we do all this same stuff, FHA, great loan. We do all the 30-year fixed stuff, conventional. We do the buy downs. We do all those things. But now we have a few more things we can help buyers with, help them get a better result and oftentimes a better payment, which to me
Yeah.
is a motivating factor. It really is.
Mm-hmm. Mm-hmm. Well, that sounds good. And, you have to just keep evolving as people's
Yeah,
needs change and that sort of thing. So I like the veteran deal. And,
I love that.
yeah, that's nice. Maybe I'll call some of our veteran clients and let them know. So in case
Yeah,
they have any, friends, or family that,
I appreciate
they
that.
can
That'd be
let
good.
them know too. Yeah.
Yeah,
Yeah. Really good.
yeah,
Well,
I
that's
love that.
exciting, Rick. Thank you very much. And how's today's Monday. We're recording this a little bit early, but
Mm-hmm.
how, is the market now with
Mm.
interest rates?
Market's been off a bit the past couple of weeks. Do I worry about that long term? No, it's short term. A lot of things driving the market right now. Of course, the tariffs and the trade imbalances are what's causing a lot of that.
Mm-hmm.
Here's the problem with where the rates are trading. It's a conflict because you look at some of the numbers of the economy. We know what drives the rates is the economy, economic data, and so
Mm-hmm.
what will drive the rates down? Ironically, what drives rates down is bad news about the economy.
Right.
Okay, well, what's bad news? Well, you look at things like retail sales, durable goods orders, other factors. If those are off, that means the economy is slowing down a little bit, and that's going to be
Mm-hmm.
better for rates. But here's the
Mm-hmm.
conflict that last year or so. The job market's strong.
Mm-hmm.
So once again, this past week, the numbers came out for employment, and those numbers were better than expected by a wide margin.
Mm-hmm.
So that conflict keeps the feds from lowering the rates. It keeps the
Yeah.
market from going down in rates for now. But here's the weird thing on these jobs reports, you have
Yeah.
to read the numbers. So for the most part, these jobs reports, even though their jobs are growing, guess what? Guess where they're growing? low-wage
Where?
jobs. Low-wage jobs. That's where the growth
Yeah.
is. That's what's
Mm,
driving the job growth. Does that
mm,
drive the economy? Probably not.
right.
So we have to just be patient with those numbers for a little bit here. I do think long-term, by the way, where rates are not high. Where the rates
Right.
are kind of good market rates
Yeah.
historically. We just
Right.
got, during the COVID years, we got spoiled by, oh, what's the rate? 3%? I'll take it. Look,
Right.
that's never coming back in my mind. We won't ever see that again.
No.
But is there room possibly for rates to go down another 1% or so in the next 12 to 18 months? Yeah, I think that's a real possibility.
Yeah.
So we'll
Yeah.
go with that.
Yeah. All
The
right.
rates are good overall.
Well, that's good. That's a very good analysis. All right, Rick. Well, I appreciate you. Thanks for sharing that info, and we'll see you next week.
Awesome. Thanks, Megan. Appreciate you. See you later.
Thank you.